Hello and welcome back to another episode of Word Wednesday. I'm your host, Paige Goodger, and as always, my co-host is Mr. Bix Weir. How's it going, Bix?
It's going well. It's going well. You're trying to stay sane out here.
Me too. Me too. So today we will be talking about high frequency trading, or HFTs. We're going to be talking about what it is, how it works, and why it leads to rigged market capitalism. So, high frequency trading is the use of high speed computers governed by complex algorithms to analyze data and transact orders in massive quantities at very high speeds. That was a mouthful. So let's break this first part down. We have high speed computers. When dealing with high frequency trading, you have to factor in the speed of light because that is how fast we're talking here. High frequency trading is a contest of man versus machine. Their strategy: trade as much as they can as quickly as possible. To ensure this, most high-frequency traders have what's called co-location. This means their high-speed computers are in the basement of the New York Stock Exchange, so these algorithms can receive data faster than other traders. Second part of that was the complex algorithms in analyzing data. So algorithms are like instructions to computers. They tell the computer what to do, what to look for, and how to react. Specialized algorithms evaluate stock market rates and are able to buy and sell stocks fully or semi-automatically. A simple example of this is if grain falls below a certain level, buy X amount of grain stock. Those codes would be written into the algorithm. So it could be said these high-frequency trading algorithms detect movement in the market. What was traded in days, hours, and minutes is now bought and sold within seconds, milliseconds, and microseconds. Sounds like it would be helpful, right? Well, you know, here on Word Wednesday, nothing is ever as it seems. So Bix, tell us the truth about high frequency trading. How do they do it? And is it considered market manipulation?
Yes, it is. And it's massive market manipulation. It's front running mostly, which is getting ahead of people put their orders in. And because these computers are so fast and they're located right on the exchange, they see the orders before it gets to where it needs to go. So they get in there, buy the stock before, or whatever is being traded before the person who put the original order in, and then sell it back to them and make pennies every time a stock is traded. Theoretically, that's illegal, but the lovely CFTC does nothing as usual. But there's also all kinds of fraud. You can spike the price down, spike the price up, massive buy sells to yourself over and over and over again so that everybody doesn't know what's going on. You run the price up, all the weak hands place their orders in, then you slam the price down and you short it to make money going down. You can tell high frequency trading has absolutely taken over all markets by the volumes of whatever item is being traded. The volumes are ridiculous, into the millions of shares per second. You're like, what in the world is going on? It's pure fraud. It should be outlawed. It should have been outlawed back when it started in the 70s.
So one of the ways that they do that are these automatic market makers, or AMMs, correct?
Yeah. Okay. I mean, that's just a legitimate, it's like a license to steal money if you're a stockbroker.
Yeah. I just want to give a small example of how this works and why this is manipulation. So let's say I wanted to buy 1,000 shares of Tesla stock, and the current market price is $24.50. And the maximum price that I want to pay is $25 per share. So the algorithm on my end will break that trade up into 10 100 share blocks. So the automatic market makers would start pinging, right? And those would ping and say, hey, someone wants to invest, but these automatic market makers don't know what price or how many shares. So these AMMs send out offers to try to offer me what I want. They send out a ping at $27. It's not picked up because my max is $25. So that's immediately canceled. They send out a ping at $26. That's not picked up because my max is $25, immediately canceled. They send out a ping at $25. It's accepted because my max was $25. At this point, the automatic market maker buys up all the shares it can and at whatever price, and they sell those to me at $25. Now, if you remember, the market was at $24.50, but I had to pay $25 because these AMMs have dragged all those available shares to themselves. So they're now able to manipulate the price from $24.50 to $25. Now you might be saying, Paige, it's only 50 cents. But remember, I was buying 1,000 shares. So that went from $24,500 to $25,000. That's a $500 profit on one person with 1,000 shares. Now apply this micro example across the board on a macro scale. These guys are making billions.
Yes, they are.
It's insane. So this sounds like a pretty lucrative market, Bix. Why is this detrimental to free market capitalism?
Well, it's removing the buyer and seller relationship. You have someone own that share of say, let's say we're talking stocks, and this could be applied to gold, to silver, or anything. Somebody owned that stock, the stock certificate, and somebody had cash and wanted to buy it. Now, usually there's a broker that comes in between those two, and that's where the stock market makes money and things like that. Now we have all these high frequency traders buying back and forth between each transaction. It is just siphoning value out of the transaction, out of the whole market. It is like it's like a mosquito sucking blood from a normally operating entity, and then that mosquito gets so big it turns into a vampire, and all of a sudden all your blood is gone. And that's exactly what has happened over the allowing of this to happen. It started really with computers in the 70s, late 70s. I actually worked for a guy who was doing this out of his garage. I was gardening for him when I was in high school. His name is Blair Hall. He ran a company called Hall Trading in 1981, right around 81 or 82. And he was doing that, just the computers were slow, and he was making tons of money. He lived in a mansion and I was like, what are you doing? And how do you do it? He had all these computers in his garage. It ended up, he turned into one of the biggest high frequency trading companies, Hull Trading, literally that had ever run the business in the early days. Goldman Sachs ended up buying them out for, I think, almost $600 million back in 1999, when that was $600 million. It used to be a lot of money. And I was always like, you don't know anything about these companies you're buying. You don't know anything about who's selling it and who's buying it. You're basically getting your nose in it to make a penny or make a dollar. Back then the spreads were much wider, because now you just got to compete with computers. There's no reason any of this. It provides no functional aspect to price discovery. What it adds is volume, and they call that liquidity. This is not liquidity. When you have billions of shares trading of an asset that, by the way, only has 100 million shares in the total float, that is not liquidity. That is fraud. That is market manipulation. But it is allowed because these people pay huge fees to the exchanges to keep their computers in their basement to continue to steal. Our whole system is fraudulent. It's really embarrassing when you talk about it to the rest of the world. They're like, wow, America, you claim to be this virtuous country, and yet all you do is lie, cheat, and steal in the banking business.
Yeah, so why are they allowed to do this? How is this legal, and what process allows these high frequency traders to continue their business?
It's allowed because the little guy has no say. The big guys who own the exchanges, which they used to all sit on the board of the exchanges, now because it turned into such a fraud, they all went public, and most of them are owned by the Intercontinental Exchange, now ICE, which is a massively fraudulent criminal organization. And Kelly Lochran, or whatever her name was running for Congress. She's the wife of the guy who started it, and is the CEO of ICE. I mean, the United States has turned into a criminal system, and it's really sad, and it's embarrassing when you're a banker and you know what's going on, because the rest of the world, we claim to be this bastion of free markets and free enterprise, And yet all we do is lie, cheat, and steal in the banking business. This is not good for our country. It exposes us. Why do you think China is cleaning our clock right now? Because they saw what we were doing and they're playing the game. They're buying gold and silver because they know it's massively undervalued because of these high frequency trading.
Yeah. And these high frequency traders or high frequency trading machines, I should say. They're not people.
Companies.
Companies, yes. But they are no longer just detecting movement in the market, but actually making the market move independently. Like you said, even if there aren't any buyers and sellers. Let me give you guys an example of how this works. So high frequency trading bots used to just read ones and zeros, right? The typical language of computers. But now these algorithms are so complex that they can read words, sentences, entire business reports, news articles, and tweets. A big part of data that is being analyzed by these algorithms is language. High frequency trading bots or low latency news bots scan information on the internet and rate it based on the language it uses and assigns positive or negative values. Let's use the Johnson & Johnson talcum powder scandal. Words like cancer, allegation, cover-up, recall, class action lawsuit were used. Those definitely received a negative value. And the Johnson & Johnson stock plummeted within seconds of this story hitting the news. Because these bots are weighing the goodness and badness of all news across all platforms, the market can be adjusted almost instantly. Bots are determining if it's good or bad before anyone else has the chance to even read it. The market reacts before regular people have the chance to react. We are no longer in a human world. We are in the world of machines making all the decisions. So Bix, do you think it's fair that these bots are determining if a stock is good or bad before people are able to?
Well, actually, I do. In that instance, the instance that you talked about, the first one who gets the information should be able to trade. But that's not exactly what goes on. What goes on from there is pure market manipulation. They drive the price up. They get false bids in. JP Morgan got busted for $920 million in high frequency trading in the gold and silver markets for basically spoofing, putting pretend bids out there. And when they see, it's like when you see something coming in a flash of a moment, you pull your bid back just to rig the price and make sure the market goes whichever way you want it to go. If they just stuck with what they say they're doing, we're just getting information faster. That's an efficiency of market, but that's not all they do. There are so many new terms for how to game the stock market, the bond market, the currency markets, the oil market, the gold and silver market. They got swaps and swaptions. Those are the derivative side. Those are being traded with high frequency algorithms too. It's like everything has turned into this big, ugly machine that I don't know the percentage. I had heard it's well above 90% of all trades are done by high frequency traders now. That is insane. We don't have free markets anymore. We have a couple guys behind computer screens clicking mouses. And I know this is not going to end very, very cleanly. This is going to end with these machines fighting each other so much that they basically lock up and implode. And we've seen it before in the 1990s with gold algorithms. This brilliant company went under because the quants got it wrong. These guys are not omnipotent. They're going to get it wrong, and they're not going to know what another quant is doing. And all of a sudden, as they're trading billions of ounces of silver every second, they are going to lock up, and it is going to be horrific. It has happened before. They'll usually just bail out the traders. Say, oh, no, we had a computer malfunction. So they basically, they get all the wins they get, but if there's a big loss, they get to walk away scot-free. It's insane.
Yeah. So that number, high frequency traders only account for a small part of all traders, yet they're responsible for about 2/3 of all stock market transactions.
That's just the high frequency traders. Yeah. Everything is on computer now, though. All computer trades in general, they've even taken the brokers out from the pits. All the brokers in the pits are now gone. It's all computer generated now.
Every single thing is on a computer. When I said this is a race against man versus machine, I wasn't kidding. Max Kaiser, I think I'm saying that correctly, patented a program, and it was designed to take the manipulation out of the markets. And it would essentially do this by matching buyers and sellers automatically, eliminating front running. But this program fell into the wrong hands and became the prototype for automated trading programs that actually facilitate this front running. And Max Kaiser actually maintains that computerized front running with HFT has become the principal business of Wall Street and the primary focus driving most of the volumes on exchanges, contributing not only to a large portion of trading profits, but to the manipulation of markets for economic and political ends. So one of the things that was brought up was the having a minimum holding period for these high frequency trading bots. And a minimum holding period would be how we talked about earlier. These bots can send out different prices really quickly, and then if they aren't picked up by buyers, they're canceled immediately. So, Bix, do you think requiring a minimum holding period, let's say 500 milliseconds, would create equal opportunities and possibly prevent flash crashes?
Uh, it would, depending how it was structured, but at the same time, we need to get rid of the insanity of day trading altogether. It provides nothing to a free market. It doesn't provide price discovery when you have day traders or high frequency traders or whatever you want to call them trading back and forth multi-zillion times per second just to suck some blood out of the living organism. What we need to do is stop that. When you go into a market, and this will happen, when these markets crash, they're going to go to willing buyer, willing seller. You buy something, you hold it for a day at least, or something to that effect. All these brokers will say, oh my God, what are you talking about? How can we make money that way? Well, you shouldn't be making money. These are companies' stocks that are up for other investors to invest in, people who have money, who want to invest it to get a return over time. Day trading, high frequency trading, it's all bullshit. It's all a way for them to steal money from the little guy, and it's destroying our capital markets. It's destroying our free markets. We need to get rid of day trading and get rid of high frequency trading.
Yes, I agree. Real commodities that people depend on are controlled by algorithms that we don't understand, operating on time scales that we can't even conceive of. Bots are controlling prices of things that are in our world. Is it our world or the algorithm's world? Just saying. Where is the emergency override switch?
We need to press it. We should have pressed it years ago.
Should have pressed it a long time ago. So I think that is where we are going to wrap up for Word Wednesday on high frequency trading. Bix, are there any last words that you would want to share with anybody about high frequency trading?
I think high frequency trading and derivatives are going to destroy what's left of the American free market. And we're not talking years, we're talking probably months from now. So get your assets off the exchanges and you don't have to deal with them.
Yes, in your own possession. Thank you so much for tuning in to this week's Word Wednesday. I can't wait to see you next week. Take care until then.